In a world where the mighty greenback once ruled supreme, the winds of change are beginning to howl. For over a century, this all-powerful currency has been the lifeblood of international trade, the cornerstone of global finance, and the anchor for countless economies. But now, as the tectonic plates of economic power shift and alternative digital currencies loom large, the once unquestionable king of currencies finds itself gasping for breath. Let's explore the death of the US dollar, a tumultuous tale of a currency on the brink of collapse. To better understand how the US got here in the first place, let's dive a little into the past. We all know about the G7 and G20, the two economic groups formed back-to-back to represent and discuss the world's financial issues. However, in recent years, a new group of nations has come together to reduce their dependence on the United States and strengthen their economic power. This group, known as BRICs, includes some of the fastest-growing economies in the world, including Brazil, Russia, India, China, and South Africa. The BRICs have even overtaken the G7 in terms of purchasing power and GDP, and may soon expand to include even more countries, such as Argentina, Egypt, Iran, Indonesia, Bangladesh, and the United Arab Emirates. If accepted, this would create an entity with a GDP that's 30% larger than the United States, over 50% of the global population, and in control of 60% of the global gas reserves. Undoubtedly, a coalition of this scale would wield substantial power and sway in the realm of international finance, and one of their potential goals could be to supplant the dollar. This is because, following a trade agreement between China and Brazil to abandon the US dollar, a new report indicates that BRICS nations are developing an alternative payment method based on a strategy that doesn't rely on the dollar or euro, even though specifics are limited. The novel currency is said to be backed by gold and other resources, such as rare earth elements, and is set to be unveiled at this year's BRICS Summit, scheduled for August 22nd to 24th. Interestingly, this news comes shortly after South African officials visited Russia to discuss a new global order. With such significant influence, one of the possible initiatives could be replacing the US dollar. The process of de-dollarization aims to reduce the US dollar's dominance as the world's reserve currency and promote competition. This development is a response to concerns over the US dollar being weaponized through sanctions against other countries, and the creation of a new currency could offer an alternative for transactions outside the United States. While some argue that this move could reduce dependence on the US economy and mitigate the impact of its economic and political changes, others believe it could help countries avoid sanctions and achieve lower inflation, economic stability, and growth. The US dollar's dominance has been declining for over 20 years, and three things are to be blamed. Firstly, today's market boasts significantly more liquidity than in the past. Previously, burgeoning economies lacked access to electronic trading, resulting in reliance on the US dollar for settling transactions. However, with reduced transaction costs, these economies now can utilize various currencies with a simple click, thus diminishing their dependence on the US dollar. Secondly, countries already possess a substantial amount of US dollars in their reserves, allowing them to accumulate different currencies at an increased rate. For instance, a study discovered that among 55 emerging markets, 30 held excess reserves in 2017, with an average excess of 58%. Lastly, the conflict between Russia and Ukraine compelled countries to adopt alternative payment methods to conduct business with one another. Examples of this include Russia invoicing in rubles, Saudi Arabia paying in renminbi, and China engaging in trade with their yuan. The shift towards these alternatives highlights the diversification away from the US dollar in global transactions. In response to these factors, central banks have been buying gold at a rapid pace, with China purchasing 30 tons in December and Turkey being the largest buyer in the last quarter of 2022. This large-scale gold acquisition could symbolize a departure from the US dollar, as reserves have dropped from 70% in 2000 to 60% today. The move to diversify holdings outside the United States and invest in assets that hold value against inflation has led some to call for a return to the gold standard, although this seems unlikely given the current national debt. Many economists want BRICs to expand and create a fair, multi-currency global system by introducing emerging nations. And while this may seem counterintuitive for those who want the US dollar to remain dominant, it addresses the challenges faced by developing nations whenever the Federal Reserve changes monetary policies. Nonetheless, the dollar milkshake theory suggests that as demand for US dollars increases, other countries need to print more of their currency to pay for those dollars, potentially resulting in cascading defaults across large economies. Despite these concerns, it is unlikely that any other currency will replace the US dollar as the dominant global currency anytime soon. The US dollar currently accounts for 90% of all transactions, and the notion that the BRICS nations could create a new currency that the world would immediately trust is far-fetched. While some countries may be wary of the US dollar due to sanctions, interest, rates, inflation, and a volatile Federal Reserve, the chances of the US defaulting on its national debt or losing its status as a reserve currency are relatively slim. However, history tells us that no reserve currency has lasted more than 110 years, and the US dollar is currently in its 103rd year. While this does not guarantee the end of its reign, it highlights the importance of being prepared for a potential shift in the global financial landscape. There is a small but not zero chance that the US could face a debt ceiling crisis if Congress cannot agree on a new limit, which has never happened before. Such a crisis could potentially shake the US dollar's stability, but it remains an unlikely scenario. In conclusion, while the ongoing gold buying spree and the rise of BRICS nations may signal a desire for greater financial independence from the US dollar, it is improbable that the dollar will be replaced as the world's reserve currency shortly. The current dominance of the US dollar in global transactions makes it difficult for new currencies to gain immediate trust and widespread adoption. However, it is essential to remain vigilant and be prepared for potential changes in the global economic landscape, as history has shown that no reserve currency lasts forever.